How do you only have a revenue of $5 million? As an innovative tech company that's going to change the future, how can you only be making $5 million in revenue? Literally, the Chinese takeout restaurant down the block from me makes $5 million in revenue. They probably make more money than Microvision. They do, because they actually turn a profit. Please like the video, please subscribe, and if you enjoy my content and want to support my channel, please check out my Patreon, link in the description down below. And just a reminder, at 100 subscribers, I will be giving away an Xbox Series S, so stay tuned for that. So today, I wanted to do a full due diligence about Microvision, ticker MVIS. In the past week, Microvision has been a very hot stock. It's been the number one talked about stock on Wall Street Bets, and it's had an incredible run in the past week. We had a 10% increase day, we had a 5% day, and then yesterday on Friday, we got a 37% gain. A lot of people on Wall Street Bets, a lot of apes, seem to really believe in this stock. They're saying a lot of good things about it, saying there's a great future ahead of the company. Now, full disclosure, I do not have a position in Microvision. I'm just sitting on the sidelines and just observing what's going on. So I don't have a personal interest in this, alright? I'm coming at this from an unbiased standpoint. So yesterday, I did a technical analysis video about Microvision. You can go watch it if you want. But in summary, I said that just from looking at the charts, it seems as if Microvision is extremely overbought right now, and it appears that it got short squeezed, and it appears that we are due for some pullback, either a little bit or a significant amount of pullback, but it does seem that we are due for a pullback. Now, I've only been doing YouTube for a couple weeks now, but I'm learning very quickly. When you do videos about a hot stock like this, a lot of people click on your video expecting confirmation bias, and even when you say the slightest thing bad about it, they don't let you hear the end of it. But hey, I'm just telling you guys the truth. I want everyone to make money, and I don't want people to lose money. That's the ultimate goal of this show, is to entertain you guys and educate you at the same time. So, like I said, yesterday I did a technical analysis video, just on the technicals, alright? Not a fundamental analysis. And as soon as that video goes up, I start getting hate immediately. Talking about, dude, you don't know what you're talking about. Do some due diligence before you post this stuff. Blah, blah, blah. So guess what? I finally had some time this weekend. So today I'm bringing you the full due diligence of what I found about Microvision. And before we get into it, I'll just say straight off the bat, it wasn't good, alright? Within the first 5 minutes of me doing research, I immediately knew that this was a terrible company. So for all of you guys that came on this video looking for confirmation bias, you probably don't want to watch this. See, nowadays, apparently looking up the next big catalyst and getting hyped for it is considered due diligence. Nothing to do with fundamentals or financials or technicals or anything like that. Apparently that's not due diligence. Apparently, due diligence is, oh my god, they have a big event coming up, and big catalyst equals moon. And really, that's how you know you're talking to a noob. When someone assumes that a stock is going to go flying to the moon because of a catalyst, you know they haven't been doing this for a long time. Because more often than not, the stock tends to tank during a big catalyst. The complete opposite of what you would expect. And this is because people buy the hype and sell the news. They buy the rumor and sell the news. So yes, while it's possible that the stock will moon after a big catalyst, it certainly has happened before, more often than not, history says that the stock will tank after a big catalyst. Anyway, let's get into the DD. So I have a few DDs by some Redditors, and these are pretty high quality DDs, alright? It seems like these guys really put in the time and effort to research this company. So I appreciate that. So we're going to go over those. And then I found some DDs from bears. And those are also very complex, and you can tell a lot of research went into making that. So take the DDs with a little grain of salt. Just absorb all the information and come to your own personal conclusions. Don't believe everything that you read. All right, let's do it. So this first DD was posted by TechSMR 2018. And I don't think he actually wrote this DD, but he reposted it. Okay, so who is Microvision? We got the CEO, Sumit Sharma, and we got a few other board members and stuff, but this guy Sharma is definitely the MVP of the company. So it says Microvision was founded in 1993. So literally that's older than me. And over 28 years, they've accumulated a debt of $572.6 million. Now this guy says that's because over these 28 years, they've accumulated 484 patents and had to invest a lot of money into research and development. It says the CEO Sharma was the former head of operations for Google Glass. And on April 2nd, 2020, they hired a firm, Craig Hallam, to help them find a strategic investment, aka they hired a firm to help them be acquired. So he goes into the technology here. Not going to get really into it, but basically they have AR and VR technology, so augmented reality and virtual reality. And then their new thing is their LiDAR technology. Their HoloLens 2 technology is used by Microsoft and is better than what Microsoft had prior to using this HoloLens 2 technology. Then he goes on to talk about how the industry of near-eye displays is going to grow over the next couple of years, and the market share is going to be very large. Microsoft just won a contract with the US Army for 10 years for supplying them with these AR goggles. And apparently these goggles are utilizing some of Microvision's technology. Then he goes on to talk about what LiDAR is, which is basically just a sensor that helps autonomous vehicles drive itself. He's claiming that Microvision's LiDAR technology is way better than their competitors. We're not going to get into that, but that's the claim he's making. The company's current focus is finding a strategic investment. And he goes on to talk about potential companies that could acquire Microvision. And this includes Apple, Microsoft, and Facebook. Okay, so that was the summary of this first DD. Pretty solid information. I will just say that there are no rebuttals in this DD. Doesn't really talk about the negative of the company. Well, he does talk about how they are in financial trouble and haven't generated a profit. But he doesn't really take a deep dive into the financials. So this one is by 0G34R. So I'm not going to repeat anything that the other DD said. I'm only going to mention new information. So this guy focuses a lot on recent events and not quite catalysts, but potential events that could push the stock price up. He talks about Q4 earnings. He talks about restructuring of the board. He talks about the company hiring a lot of engineers. He has a section on technical analysis, but he admits that it's not his own analysis and he's not that good at it, so he just reposted. But I did do my own technical analysis yesterday, so go check that out if you want. So he addresses the buyout speculation, saying that there might be a buyout, but even if there's not, he believes that the fundamentals are so strong that Microvision will hit $90 to $125 by the end of the year, even without a buyout. Quite ambitious, if you ask me. That would pretty much mean that even after this huge jump, when Microvision is sitting at $18, he would still need approximately a 500 to 600 times gain by the end of the year to hit this price target. Pretty unrealistic, but anything can happen, right? He talks about the short interest, which currently at this time sits around 18%, according to the latest short data, which came out on March 31st. So this was more good information here. Now let's take a look at the last bullish DD. And this is by the same guy, 0G34R, and this is just an update. So he just talks about more catalysts and potential events that can drive the price up. He talks about the LiDAR demo that's happening in April, which I believe is next week. There's a lot of high expectations for that. He talks about Biden's infrastructure plan and wanting to invest a lot of money into electric vehicles and charging infrastructure. And he says that that will help the sales and revenue of Microvision. So this update really just focuses on upcoming catalysts and potential macro events that will help this stock. Okay, and that is all the positive DD I have for this. They all have some great information, but it seems like they don't address any criticism of the company. They only talk about what's good, and they make it seem like there's no bad. But in fact, when you dig deeper, there's a lot wrong with this company, and we'll get to that right now. So this is an article on Seeking Alpha. It's really more like a DD though, not really an article. And this is by Western Edge, and full disclosure, he has a short position in the stock right now. So he is biased. So he starts off talking about the company's history. He basically says that for as long as Microvision has existed, they've been all talk and no action. He says they come out announcing a lot of new technology and plans for the future, but always fail to deliver on those promises. He goes on to talk about how the company is in financial trouble. He says that Q4 2020, the revenue was $395,000, which was the lowest figure recorded over 10 years. He says they constantly have to keep selling shares because they have no cash. And he says that they're now exploring potential sale of the company, which is what the bulls call strategic investment, but there is little indication that there are any interested buyers. Now he goes on to talk about their LiDAR tech. He accuses the company of being 28 years old, but yet there are barely any sales and any products for sale. And he says he doesn't expect anything different with their LiDAR units. Down here we have a little graphic of all the players in the LiDAR industry. So we see here we got Ava, AI, Aurora, Cruise, Innoviz, Luminar, Velodyne, Waymo, and then Microvision. And we can see here that literally every other competitor has a relationship with an automaker. We got Volkswagen, Porsche, Audi, Continental, Subaru, Toyota, GM, Honda, BMW, Volvo, Ford, Hyundai, Fiat, Chrysler. All their competition already has one of these strategic partnerships that Microvision is seeking. And even further than that, these companies are backed by large firms and institutions. We have investments from Intel, GM, SoftBank, Samsung, Baidu, Nikon, and Google. And we see here that Microvision has no relationships with any automakers and no investors. So it appears that they're very behind in terms of competition. And down here, he criticizes Microvision because they announced in 2017 that they were working on LiDAR, and now it's 2021 and they still have nothing. Or no marketable product, I should say. They have prototypes, but they have nothing to sell. He says here that during 2020, 97% of revenues came from one single customer. That's pretty alarming. And he says that the revenues are actually decreasing every quarter, not increasing. So this is another red flag. He says Microvision is not selling any products to any customers. The only way they make money is from licensing and royalties. Okay, and that is the first bearish DD that we have for Microvision. And yes, this guy is pretty harsh and pretty biased, but he has a lot of data to back up his points. He provides valid evidence. actual charts and numbers, and not just, I think this is going to be a big catalyst, so when moon. But he's just one guy, so let's take a look at another DD. So he addresses these rumors that Microsoft is seeking to buy Microvision. And he basically just says that he doesn't think this is true because if they really wanted to buy Microvision, they would have did it by now. He says, since Microsoft has not bought Microvision, they likely found a way to be contractually insulated from Microvision failing or being bought out. AKA, Microsoft really doesn't need Microvision like that. They don't need their technology, and they're not scared of a competitor coming in to acquire Microvision for this technology. And then he dives into the financials. In 2010, Microvision only did $5 million in revenue, and in 2020, they did $8.5 million in revenue. How do you only have a revenue of $5 million? As an innovative tech company that's going to change the future, how can you only be making $5 million in revenue? Literally, the Chinese takeout restaurant down the block from me makes $5 million in revenue. They probably make more money than Microvision. They do, because they actually turn a profit. They've been losing money every year since they've been in existence. In 2010, they were losing about $50 million a year, and now it's a little better. They're only losing $22 million a year. And in total, they're almost $600 million in debt. And then he goes on to address this strategic alternatives, and he basically says that while the company is trying to spin this to look like a good thing, this is really a bad thing because they're just looking to get bought out. The number one goal of this company now is to be acquired by a bigger company. And that should raise some red flags. The goal of your company should not be to get acquired. It should be to innovate and grow and become a successful company. By making your main focus to get acquired, it pretty much is telling investors that they just want to dump the bag on someone else. It's pretty much saying that they are bag holding and they're looking for someone to take the bags off of them. And yeah, there you have it. There is your second bear case for Microvision. Okay, this is chartmill.com, and what they do is just compare a certain company to the overall industry that that company is in. So let's take a look at what they have to say about Microvision. So for fundamentals, they got a 3 out of 10. It says they were compared to 149 other companies in their industry, and Microvision scores a very bad on profitability. But it does say that their financial health is fine. So they're not in jeopardy of going bankrupt, but they have a problem turning a profit. And there is a disclaimer here that Microvision had limited data, so a full analysis of the fundamental rating was not possible. So there is probably some discrepancy here. Now let's go down to profitability. They get a 1 out of 10. It says Microvision has a return on assets of negative 65%, and this is below the industry average of 2.56%. So average is 2.56, and they got a negative 65. Big difference there. That's really bad. And it says that 98% of the industry outperforms Microvision. 98%. So they're in the bottom 2 percentile. The industry average profit margin is 3.64%. Average 3.64%. They have negative 441%. Very, very bad there. And it says that 96% of the industry have a better profit margin than Microvision. So again, they're in the bottom 4 percentile. So valuation rating, they literally got a 0 out of 10. It says with a price to book ratio of 315, Microvision is valued rather expensively. The average price to book ratio is 4.17. So average 4.17, and they have a 315. A higher ratio is not a good thing. And it says that 100% of peers are valued cheaper. So they're literally the most expensive company in this industry. when it comes to valuation. Now let's take a look at growth. So they got a 4 out of 10 here. So not too bad. Just a little below average. So it says that EPS is pretty strong, but it is decreasing. It says that revenue has decreased 65.23% in the past year, and that's really bad. And it says over the past 5 years, Microvision shows a very negative growth in revenue. And revenue has been decreasing by about 20% every year. So this is interesting. It says that EPS is going up, but revenue is going down. So let's talk about health now. They have a rating of 5 out of 10 for health. So average here. So they're in little risk of going bankrupt. And it actually says this is 98% better than its industry peers, which is interesting. So I guess they just sold off so many shares and did so many offerings that they have money to stay afloat now. It says they should not have any problems paying short-term debt, but when compared to other companies in the same industry, it has a harder time of paying short-term debt. And then for dividend, it got a 0 for dividend because it doesn't pay dividend. So this is just statistical data, all right? This is objective. The numbers don't lie. And the numbers are generally saying that it's not a great company. So there you have it. That is the full DD of Microvision. Quick recap. The bulls for Microvision, they seem to be putting a lot of emphasis on the short term. They're riding the momentum trade, and they're hoping that upcoming catalysts will propel this stock to the moon. They believe that Microvision's AR and VR technology stands out against their competitors, and they think this partnership with Microsoft is very strong. I'm not even sure if you could call it a partnership. It's more like just being a supplier. And there's a lot of speculation that Microvision is going to get acquired by Microsoft or another big tech company. To be quite honest, I'm not sure how much merit I would give this Microsoft partnership, all right? Because if Microvision is only doing about $8.5 million in revenue a year, I highly doubt that they have a partnership with Microsoft. Or if they do, it's a lot more hyped up than it actually is. Because if this AR and VR technology is really as great as it sounds, they should be making a lot more than $8.5 million every year on that, right? Now, the bulls seem to think that their LiDAR tech is also better than the competition. And I didn't really look into the LiDAR tech specifically, so I can't comment on that, whether Microvision's LiDAR is better than other companies in their industry. But I do know that other companies actually have a product, a working and marketable product, while Microvision has been planning for years now. Then the bulls say that this strategic partnership, aka trying to get acquired, is a good thing. And in reality, it's not a good thing. In fact, it's a pretty bad thing because it signals that their main priority is to cash out and not to grow the company. Their main priority is to dump their bags on someone else. So the bulls, their trading is very momentum based. On the other hand, the shorts, the bears, come prepared with statistical data. The bears say that out of the company's 28-year history, they haven't done a damn thing or proven a damn thing. They claim it's all talk, it's all marketing, and when it comes time to actually put a product on the market, it never happens. They're basically saying it's all hype. They're saying that Microvision's LiDAR tech is not all that because there is a lot of competition. The bears make the point that all of their competition already has strategic partnerships and they have backing from big investors, while Microvision has no strategic partnerships and no backing from any investors. So basically, they're saying that Microvision is very behind when it comes to competition. Apparently, Microvision's financials are really bad, haven't turned a profit in any year they've been in operation, and they just continue to lose money every year. The bears say that there is no merit to Microvision having better technology than their competitors. And there is also no merit to Microvision being bought out by a big tech company. The bears say that all of that is just hype and speculation. And then we had a look at some cold, hard data. And the data shows that Microvision has weak fundamentals, bad profitability, bad valuation, below average growth, and average health. The data says not the greatest company in the world. So in addition to all of this, I also did the technical analysis yesterday. Go check that out if you want. But in short, the technical analysis says that the stock is entering overbought and overvalued territory, and it's suggesting that we are due for a pullback. In short, the fundamentals of this company are pretty terrible, and I do not suggest that you put your money in it. Not financial advice. And if you already had your money in it and you caught this crazy run, I strongly suggest that you sell. Because if you diamond hands this, you may end up losing a lot of money and potentially bag holding. And listen, I want everyone to make a lot of money, right? I want everyone to make tendies, but we have to be realistic here. And I don't want people to lose money. And when you see something crazy like this, a lot of red flags go off. But it's your money, and if you want to get into Microvision now at $18, you're entitled to do whatever you want. I just don't think it's the smartest idea right now. If you are long the stock and you do believe in it, if you do have money invested right now, I would sell it and try to re-enter at a lower point. And if you don't have a position, I would just wait patiently until we see a pullback, and then you can enter at a lower point. Because at this price of $18, this is not a good entry point. You know, YouTube is a pretty tough business. People come on looking for confirmation bias, and when you're just honest and you don't give it to them, they get real mad. But my opinions are based on fundamentals and technical analysis. And while I do believe that momentum trading is okay, and you can do that if you want, you have to be very careful and selective of your timing when playing momentum trades, just like this. If you're not in Microvision, you already missed the boat, alright? I wouldn't try to FOMO in at this point. And if you were in Microvision and you caught this crazy gain, now would be a great time to sell. Thanks for watching the video, everyone. I appreciate you guys. Please, like the video. Please subscribe. And if you enjoy my content and want to support my channel, please check out my Patreon. Link in the description down below. And just a reminder, at 100 subscribers, I will be giving away an Xbox Series S. So stay tuned for that. I'm Ty. This is Smarter Gambling. See you guys on Monday. Peace, everyone.